So I want to bring forward my risk management system that I'm using for trading. And the reason I'm doing this is because I see some people struggling with position sizes and with risk to their portfolio. And they've asked me, what I was doing, and I tried to explain to it, in chat and text and stuff like that. And a lot of things get lost, the nuance gets lost in text, I guess you could say. So anyway, I want to get to this. The importance of risk management is extreme. It's because it is one of the three pillars to trading. You have your emotional control, you have your strategy or reason to enter, and you have your risk management. Now, in my opinion, the emotion control, that's going to come after you've got your butt kicked a few times. The strategy, that's going to come after failing or finding strategies that are not working for you. That's going to come from that. The risk management, to me, that's math. It's solid. It's like the only thing that is solid in trading, it seems like. The only thing that doesn't just fluctuate. So I want to bring something up real quick. Larry Hite, one of my favorite books, is The Rule. And the rule is cut your losses early and let your winners run. But cutting your losses, to me, is very important. It's the most important thing. So Larry says right here, an old, very religious man lived in Brighton Beach. One day he heard that a neighbor had won $1 million in the lottery. The old man was so furious with jealousy that he ran onto the beach in front of families enjoying fun and sun and screamed up in the sky, "God, I am so angry. I have been a good husband and father. I've worked hard. I go to church every Sunday. There's been a lottery for 30 years and I've never won a penny." At that moment, the sky grew dark and a lightning bolt struck. An ominous voice came down from the heavens. "Did you ever buy a ticket? You've got to buy a ticket." The moral of that story is you've got to be in it to win it. If you keep losing your stake, you're not going to be able to be in it. You're going to have to go get another stake and time's going to pass. The point of risk management is to slow down your descent so you don't crash into the ground all of a sudden. You've got to keep going, getting other stakes, and you're really not going to be able to learn. So I want to get down to it right now. Right here, total portfolio. I'm going to put in $1,000. Just because I'm not sure who's listening to this. If I knew my audience, maybe I would say $100,000 because that's closer to what we're looking. But if you're trading with $100,000, I've got a good feeling you already know your risk management and you're not just jumping in like that. So we're going with $1,000. Total portfolio, $1,000. Available portfolio, let's say there's no trades on, so we're at $1,000. Okay, that leaves entry price and these two that I have to fill out. So I've got to fill two more pieces out. Let's come over here, and I am not saying to enter Ethereum right now. I am saying that if I were to enter Ethereum right now, this is probably what I would do. And I have no reason to enter Ethereum. I say, one of the things is reason to enter. This is not my strategy. This is not my reason to enter. But let's just say at 350 here that we were going to enter in and set a stop loss right below this blue trend line. Okay, so right there. So 565, this blue trend line right here. I'm entering. If price goes here, I'm going to realize that I'm wrong, and 565 would be the level where I would put it, put my stop loss or percentage. I mean, so 30, 50, and 565. Come over here. We said position risk is 5.65%. Entry price 30.50. So certain things start filling out on this. Now, percentage of available portfolio. This I'll go ahead and show just because it's, I'm not to show, but I'll explain a little bit about it. So if I went with 100%, right away I can see these two reds popped up. First, my position risk money is $56. That's more than my walk away percentage on the day if I only had $1,000. Okay, so that's a red flag there. And the risk to the portfolio is too darn high also at 5.65%. 2% is what the greats have shown us that we should be trading. So if it's 2%, if this flashes red for me, I know that I can't do it. If we were to drop to 50% of it, which would be $500, too much. Still, it's too red. It's red. 50%. What about 25%? 25% I can get in. Now here's the deal, it's the only trade I can get into today, because if I were to lose it, or until this trade closes pretty much, if I were to lose it, I'm going to blow my $15 loss. I'll need to make some money first, but I can lose this, but this is that slow descent that I'm talking about. So just assume for some reason I wanted to go forward with it. Now my risk to my portfolio is 1.41%. Now I said 2% is the max. That is the max. So this would show me I'm within my range and I can put this trade on. Now my position size would be $250. That's my 25% of my 1,000 would be $250. The cost of the trade, assuming it's going to go wrong, because get into every trade thinking that you're about to lose it. It would cost me $14.13 plus fees, which would put me over that. So anyway, let's just assume, in my Roth I trade fee free. So let's assume I'm trading in my Roth there. And 141%, that shows me that. So position size was 250. My cost of trade is 14.13. I set my stop loss immediately at 28.77. And we come over here. Where's the stop loss to be set? Right there, 28.78. Yeah, that's it. Right over here. Oh, it's already there. So yeah, 28.78. That's close enough with 28.77. Yeah. So that's where I would set my stop loss. And then that takes all the load, all the emotional stress of where I'm getting out. I don't have to worry about it. If I get stopped out, it's going to help me realize I was wrong. It's going to help me admit that I was wrong, and I may look for another position to get right back in again. But I'm going to have my stop, and it's going to show me weaknesses in my strategy, and my reason to enter is what this will do. This is math. This is math. It doesn't change. It gives us at least of one of the pillars. It at least gives us one that is solid. Taking profit, if you don't take profit, you're just going to watch it go up and come right back down. Have a predetermined percentage set for your profit. I have a 1 for a break even, I have a 6 and a 12. These are preset. This one I can change. I can say, what if I think I'm only getting 5% on this? And that's based on the same way that you do your stop loss, as far as then you would start looking for resistance, and you're going to put a target, take profit there. You'd be able, let's just say over here and do something real quick and just say it was coming up to right here, right? I'll get the percentage. So say we were here. We went to, as soon as it gets close to this, right here, let's say the 30 week, this is going to come around. When we get close to the 30 week, maybe say it's crowning at about 15.5%. So I'm able to come over here. I'm going to say 15.5. That lets me know I can set my take profit at 35.22. That would give me 38.75 on the trade. Daily goal is here. Walk away. If you get your daily goal, if you're doing hot, you can press your luck. But if you hit your daily goal, how about calling that a win and go touch grass, go do something. If you walk away, if you hit your stop, your max loss, walk away. You just know that, okay, you're learning these lessons. It's time to start writing, which you should be writing in your journal all the time. So whatever, but I would put several notes in. I'm going to keep rambling if I keep going. So I hope you guys found some value in this. Take what you can, build your own spreadsheet. Use Grok. Have that help you. It'll use whatever you can, whatever AI you use, or just build it all yourself like I did. I built this before. Yeah, AI was probably for the military. It wasn't for us. So anyway, that's my point. Hope y'all enjoyed it. I'm out.